I am going on vacation tonight. I'm going to go to Portugal and I'm going to be there until next Sunday. So, my plan is to not record any videos. I need a vacation. It's something I haven't had in a very long time. I'm excited for it. I'm still going to be working. I'm still going to be tweeting with potentially slightly less frequency. But I do think I'm not going to make any videos during this time. So in today's video, we're going to cover the week ahead because I think it is a pretty important week ahead. First, I just want to talk about today's market. Yes, obviously, if you've been watching this channel, I am pleased to see this action. Even if you're a bull, you should be somewhat okay to see this action. And if you're a bull and you think stocks are fairly valued at these prices, pleased to see this action because we've had quite a vicious run. It's just kind of continued to escalate in slope. And you need stuff like this to be a healthy market. Otherwise, you're just going to burst the bubble. And after the greatest run in the NASDAQ in 40 years or some tremendous statistic like that, you want stuff like this. So, when the dot-com bubble burst, it's not like there was a massive run. This is potentially a very peculiar thing. I don't know if we're going to make new lows, but what I do know is that there are definitely recessionary indicators out there. And this earnings season so far is not last earnings season. And there's more to come. There's more to come. And what's to come next week are two very big and potentially turbulent things. One being the Fed meeting. We all know the whole market decided to celebrate June CPI. Some may also know, we've talked about in the past couple of videos, the idea that Janet Yellen said don't read much from the June CPI. They don't want to celebrate. The market is clearly celebrating. What if the market's wrong? I don't know. The market's been wrong about many a thing so far this year, particularly forecasting rate hikes, and it's continued to go higher. So, who knows what's going to happen? I've been humbled in this period, I will say that. But I'm seeing signs that it's not going to be such a good future on the inflation front. I think we may potentially be in for a second wave of inflation that may not be as tough as the first wave. It might not be the case. It might not. But inflation seems to be ready to stick around as energy prices reaccelerate. The SBR has been drained. It was always a temporary thing that was going to impact the oil picture. That's why we've stuck with the positions and just collected the dividends in the meantime. And now it's gone. And now gasoline is at a 3-month high. As of yesterday, it went higher again today. It's a new 3-month high. I expect this trend to continue. Refineries are operating at maximum capacity. Gasoline demand is up, week on week, 8 days in a row. Yes, it is a driving season, but demand is staying strong. We got news today of strong coal exports up double digits year on year out of the United States. And that's some good news. That's some good news. Net overall, even though domestic exports fell in the United States, let's not forget, there are a lot of mines in Australia that export to the biggest coal consuming countries, China and India. They're still buying our coal, even though it's more expensive to ship it over there. That's the truth. So from an energy perspective, it seems like those countries are relatively strong. Those numbers in terms of coal exports and domestic came from CSX, a transport company that just reported earnings today after the bell. So I think we might be in for at least second wave energy inflation, and my presumption is that's going to trickle to everything else, including wages. In this environment, that seems to be the trend because the move is big. It's a big move. It affects the wallet. It causes employees to ask for higher wages. That's just the truth. That's what's happening. So we've got a Fed meeting next week. They're seeing this stuff. They're analyzing this stuff. They're definitely concerned about this stuff. We know Kashkari is talking about the need for higher capital requirements. We know Michael Barr talked last Monday about the need for higher capital requirements. And today, we got an announcement that the day after the Fed meeting, they have a meeting about higher capital requirements. That is a pretty big and potentially volatile and turbulent event, particularly when you consider the fact that Kashkari posted on Threads. Kashkari and Goolsbee seem to be using Threads to just try to get the market to listen to them, because the market just hasn't been listening to them for months. The Fed tried to surprise with 2 additional forecasted rate hikes. 2/3 of the Fed members forecasting 2 additional rate hikes. The market, yet again, is not pricing that for the millionth time in a row since August 2022, when Jerome Powell delivered the Jackson Hole "There will be pain" speech, and then they listened. I don't know if we're in for another "There will be pain" speech, but in August we do have another Jackson Hole, and the market better smarten up by then, because otherwise they're going to have to lay down the hammer, because by then energy price will probably be higher. So I'm just sharing you my thoughts, my perspectives. We'll see what happens. Anyways, I think those 2 events next week going to be very important. Very, very important, obviously. So while I'm on vacation, feel free to ask me questions. You can DM me at any time. You can tweet me at any time. I am accessible for anything I can do for you. That's today's video, and until next time, peace out.